Hello all, welcome to today's podcast. Today we have Dave Arvind with us. What is exactly stock market and how does it work?
Stock market is nothing but a marketplace where company shares can be bought or sold. Typically, bank account offers you two benefits. One, it is safe.
How do I start building a portfolio if I don't have much money to invest?
Investing in the stock market has its own set of risks.
Hello all, welcome to today's podcast. Today we have Dave Arvind with us, and in this podcast we'll discuss about common aspects of savings, investments and more. Hi sir, welcome to the podcast.
Hi Sarita.
What exactly is stock market and how does it work?
A stock market is generally a marketplace where publicly listed companies can be bought or sold. For example, in India, there is the National Stock Exchange and the Bombay Stock Exchange, where these companies have been listed. And generally, the prices are determined by demand and supply. So, for an investor to buy any publicly listed shares, it can be bought via the exchanges in the stock market.
Sir, why is it important to save money and how much should I save each month?
So, to start investing, that too at an early age, gives you the benefit of long term investment as well as the power of compounding. And to answer your second question, how much should you typically save? The general thumb rule is 20% of your income should be saved. However, based on different people's financial goals and how they want to live their life, they can change that 20% to 30, 35, depending on how their income levels are.
So, what's the difference between investing in a bank and investing it in the stock market?
So, investing in a bank account generally gives you the benefit of liquidity and safety, but its returns are generally only equating to the inflation. Whereas, when you invest in the stock market, not only do you beat inflation, you also can expect returns apart from beating this inflation.
Is investing in the stock market safe or is it like gambling?
So, investing in the stock market is not gambling at all. The reason is because, in case of gambling, it's a matter of chance. Whereas, in case of investing in the stock market, it is purely based on research, analysis, and your thorough understanding about a particular share and then investing in it.
So, what is the first step I should take if I want to invest?
So, for you to start investing, like your previous question where you asked about investing in the bank versus investing in the stock market, investing in the stock market has its own set of risks. And for this, you should do your own bit of thorough analysis, understanding about the stock market, the risk involved in it, and then invest. And your first step is to open a demat account with a SEBI registered stockbroker. And once you've opened your demat account, you don't have to invest a lot of money. You can start investing in smaller amounts. It could be made as SIP investments or buying few shares of, let's say, in and around 500, 600 of value. And you can slowly start building your portfolio. And always remember that you should diversify your portfolio. You should buy stocks, mutual funds, ETFs. That way, you get to save all the risk associated with the stock market.
How do I know which stocks to buy and when to sell them?
See, for you to invest in the stock market and for you to identify which all stocks to buy, generally you should do your own bit of analysis. And for this, you should use tools such as screeners, analysis tools to really understand what sort of stocks you want to invest in. And generally, with fundamental analysis and technical analysis, you will get to know what are the top 5 or top 3 stocks that you would want to invest in. And for you to sell those stocks, it should generally come with some sort of a goal in mind. For example, if you have set X rupees as your target price, you can then sell it. Or if there is some change in the company's business or its performance, you can choose to exit it. This way, not only do you do your own bit of research, but you also understand when to enter into a particular stock and when to exit that particular stock.
Sir, how do I start building a portfolio if I don't have much money to invest?
Good question. So, for you to really consider to build a portfolio, you don't really require huge sums of money. You can start small. You can start with minimal amount as SIPs. It could be 500 rupees, 1000 rupees. And you can also consider low cost index funds. There are ETFs. There are a lot of options where, with very little amount, as much as 500,000, to start building your portfolio. And once you build a portfolio, diversifying it always eliminates the risk associated with the stock markets.
Sir, what are mutual funds and how are they different from individual stocks?
Think of mutual funds as someone instead of you invest in the stock market. These are typically called as fund managers coming from an asset management company. And these are professionals who generally invest across stocks, bonds, debt funds, etc. And they build a portfolio. And these portfolios, once starts getting invested in the Indian capital markets, would start generating you returns. And here, the main risk of a person investing in a single company gets eliminated, and professional people who know what they are investing get into this picture. Thereby, mutual funds is a very good start where you're investing your own hard earned money into the Indian capital markets.
What's an emergency fund and should I have one before I start investing?
Yes, you should definitely have something called as an emergency fund. Emergency funds are nothing but how much you would require to survive a month without job, etc. So these emergency fund typically should last for 3 to 6 months. So before you start investing, you should have this emergency fund, because we are living in an environment where there is nothing certain, and during times of uncertainty, these emergency funds is what is going to keep you ticking for next 3 to 6 months. So you should always have this emergency fund that gives you financial stability and financial freedom, and then you should start investing. That way, not only do you save your sustenance for 6 months, but you also ensure that you have that financial freedom to start investing your money.
Thank you, sir, for your valuable insights. And I'll come back with more such questions because I want to learn more about stock market and investment.
For others who would want to ask such similar questions, you can always comment on the video below and we will help you answer it. Thank you.
Stay tuned and follow Enrich Money for more such videos.